a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Stock market's on cocaine. The stock market's addicted to drugs.
Since how long is this addiction? Does this addiction go back to
Friday.
2022? 2008
yeah.
Friday?
It's relapsing. It had been clean for a while, but it's relapsing.
I love it.
I watched it yesterday. I mean, listen, I'm glad we did that study yesterday because hopefully that saves some people some money. Me some money.
Yeah.
Because I wanted to fade the crap out of that market yesterday. And it was like $1 going down $1. They're like, like it just could not go down $1.
I know, and even you could get it in your mind, like, okay, you're watching the daily chart, you're saying the last 20 minutes, they'll take this thing down 20, 30 points. And I walked away. They were right. It would move 20 or 30, but it wasn't to the downside.
No, that's right. I was so angry at the market yesterday. Not because I wasn't losing money. I actually made money yesterday. It just, I get so frustrated with these moves when it's, and you've seen, I mean, Dan, you've seen this 100 times. Like, you get these weird moves in the market where it's just like, you can't hit, you can't sell them to save your life. Like it's nuts.
Right. Yeah, but I think I was just thinking about, we were talking before the show started. I do think, whether it's you're parenting with, we had a little discussion, parenting with teenage kids, or, you're kind of a positive theta range bound trader. And I get this, been teaching for a while, and you get this from students. Anytime you have like maybe a little wet, unfavorable environment, whether it be a week or 2 weeks for range bound traders, I'll get this from folk in the, Dan, maybe range bound trading doesn't work anymore, or maybe
Dan, it doesn't work anymore.
This stuff is done with, and maybe we just need to, get long futures. And I said, before you abandon and invent some new thing, it is perspective. And I think, a couple things hit me and that perspective. If you look from Thursday, right? Thursday was the 26th of February. Thursday was the 23rd, right? And if you just even look at the futures, we've gone from 67.77 to 68, up 140, up 150 points in what, four days, is that something like that? And you look at, like, what's an expected move or a standard deviation for that period of time. And when you start getting stuff over that period, we're up 1.5 standard deviations or 2 standard deviations. Again, you try to get a little perspective. Those things shouldn't happen every day. It's not going to happen because, people tend to overreact, right? Well, we're going to move this much every day the rest of our lives. It's a new market. AI will be up 100 points every day.
New market.
Yeah. So I think perspective a lot is seeing where we're at. Perspective, seeing even, yes, we can stay low vol for a while, but, is this the time with VIX in the 15s to start to go the other way? Like, at 15, people should be just, I'll get more people saying, well, Dan, what if it goes to 13, right? And I'll say, well, what if at 15 it goes to 30, right? And because it's more, when you're getting that pressure, you're not thinking that we're in the lower end of the range. But one thing I want to say also is, that's why risk management is, just thinking of risk management for a second. one thing I was thinking of, tell me if you agree on this, but like, let's say you're trading 40 days duration, right? Or 50-day duration. People will say, well, it's safer and blah, blah, blah. And it is. There's nothing, those trades can work 100 days out. But the other side of the coin is if you're doing 40 days, 50 days, 80 days, you better be right? Because if you lose, right, because you're only doing your occurrences, right? You're doing, okay, 1 a month or 2 a month. Whereas when you're doing like 3-day, 4-day, 7-day, let's just double calendars or whatever trade you want to say, or 0 day, that turnover is there. Even if you have like over the last 3-4 days and you lose X amount, because you're turning it over a month, because there's more occurrences, you can make that up a lot quicker, right? I mean, people go and they say, even like, when you have a longer duration trade, say, well, I have duration over, and I'll keep kicking the can down the road. Well, now you've got that trade. If you're off on that trade, you don't have any other occurrences really to help you, right? So I think people sometimes will boo-hoo the, a 3-day trade or an 8-day trade or a 2-day trade or whatever. But I say, I love the occurrences. It still comes down to whether you're with 0-day or 2-day or 40-day. The thing is, you have to do a good job of controlling those deltas. Yes,
that's right.
That's it. I mean, it's really risk management is managing the stinking deltas.
Yep, that's right.
I mean, you could say, well, volatility and skew and all. I get it. Those are there. It's deltas, right? Especially as you get shorter term. And all it is saying, if you're doing 2-day double calendars or 0-day credit spreads, hey, it's still managing the deltas. It is a little more challenging, but you're getting the benefit of it, right? If you're doing 0-day trades, you're getting some good benefits, right? There's no overnight risk. You're getting the things. You signed up for that, right? If you're doing 2-day or 3-day double calendars, you signed up for that. It's a great trade, but you have to deal with that quick moving. But I like the occurrences because sometimes, I used to, before you had the dailies, right? You have 30-day options. So you're always out in a 30-day option. I mean, I think about the years at the CBOE, and I haven't, for Tom, we haven't.
Were you at the CBOE?
Yeah, you know what, Troy, thanks for asking. When I was at the CBOE in the pits, but you think about it, you only had, I call it the Super Bowl, you only had one thrilling day a month, right? Think about it. You had expiration once a month. And it was fascinating. Troy, you would have loved, I mean, now you have expiration every stinking day, right? You have Mardi Gras every day, but there you'd have it once a month, and people, it was so exciting. I mean, you'd have the expiration, everybody was busy after the close because they didn't have computers, really as much computers. It'd take you 3 hours after to figure out, did I make any money or did I lose? Then you had to come in Saturday morning, but that was kind of exciting. People would bring their kids in, they'd go for breakfast, you get to meet the families, because you say, why would you come in Saturday morning? They call it trade checking, because you're open outcry. I had to come and say, well, Dan, you thought you bought it at $5. Troy sold it to you. He thought it was at $6. So you had to talk about it, right? Might be over breakfast. You had to talk about it. Hey, Troy, what do you remember? But most of the time was your word was everything. In the pit, that's why open outcry, when we were there, Troy and I in Chicago, in the pits the second time, 20% is still open outcry. And you say, why is that good? Because open outcry, it's based on character. It's based on, if I was in the pit over 20 years or whatever, and I screwed somebody, excuse the bad expression, I did one time, right? If I said, Troy, I bought it at $6, Troy says, no, Dan, it was $8. I could do that. I could be dishonest one time, right? But then Troy would, you know what? We're a small community. In the OEX, which was the precursor to SPX, Troy could say, you know what? Do you remember that trade that I sold Dan? Yeah, it was at $10. Dan's insisting it was at $6. Okay. So I got Troy one time, but you know what? In that OEX pit the next week, words got out, nobody's trading with Dan. Nobody. And it was like, it was an amazing, honest system. You were used to a word of mouth your honor, your word was there was no, I mean, even a lot of the, it was very, that's what it was. But it's like, if I told Troy it was, you eat your loss, you know what I mean? Sure. Everybody would like to, one time you could say, you know what? I got killed on that Friday. I'm going to tell Troy that $10 that he knew and the guy next to him, it's at $6. I could do it one time, but then my career's over. Troy would eat that 400. He'll never trade with me again. All his buddies wouldn't trade. It was a small community. So it's, I don't know how we got into this, but folks, your word is your honor, right?
Listen, I didn't know you were a rapper because you were just spitting truth, as the kids say. You're out here on the streets just spitting truth.
Maybe I had an extra little Panera today.
Yeah, someone didn't get the
That's a triple shot.
A triple shot. Yeah. I thought maybe they put in the decaf. They put the calf in the decaf or whatever.
Someone didn't have the half calf this morning.
Someone didn't have the half calf.
I love it. I love it. Well, listen. The market is just a little goth kid. That's all it is. It's just a little goth kid. It refuses to do what it's supposed to do. It is just addicted to TVs. All the things that parents say, like the market. It's like, hey, you did awesome. You're up 130 points in the last 2 sessions, something crazy like that. Like hey, take a breather. Like take a break. Let your body grow. Get some extra sleep. Yeah.
Nope.
Yeah.
And that's where we're at right now. It'll learn though, won't it? It'll
maybe. Listen, I got a guy, a macro guy who doesn't.
I love that. I got a guy.
He's not a. Well, here's the thing. We're just talking.
Yeah.
I
got a guy.
I started trading like as a job in 2020, right before COVID. And, I went through a phase when I was like reading the SEC documents and like when a release would come out, like a company would put on 8K or 10K or whatever, I would read it. And then I thought watching there was a brief time when I was like, man, these CNBC guys, they've got ideas. So I would watch CNBC and I do all this stuff. And then I never really watched Kramer. Although I did realize that Kramer in the evening is a different character than Kramer.
Yeah,
in
that's
the
right.
morning.
Is that right?
Right.
Really?
Yeah.
Well, I mean, that's
how drugs work.
He's a super sharp guy, but the version that we get in the evening, it's like Bruce Wayne and Batman, they're the same person, but they're totally different.
Wow.
Here's what I realized is that I'm never going to be the smartest person. There's going to be people who have the information before me, but there are people that are worth following that have really good insights. So in my non-options trading, I've got a couple of these follows, right? And
it's
this
like
one,
a good electrician or plumber. I got a guy.
That's right. That's exactly what it is.
Yeah.
And so I do some equities here and there. This is not back tested, maybe modeled. Maybe we can model them someday if we want to get crazy. But here's the point. There's one guy I follow who's a public figure, and this is not secret at all. And I said this on the show, and a couple months ago, he's like, the play is going to be to lever long into the end of the year. And we had come out of Liberation Day. We were at all-time highs. I'm like, there's no way. And here we are pushing the SPX 6,900.
How long ago was this that he said it? And
months ago, before people were talking about froth and bubbles.
And what was his main catalyst to do that? I mean, obviously, what was his?
It was I can't even sum it up. It was like a 30-minute speech.
Wow.
About why he felt that way.
Wow.
But I think a lot of it is of people who deploy money positioning to get alpha. Like that's a lot of it. So but also just what the markets are pricing. And go ahead, Troy.
I keep interrupting you and I apologize.
No, I mean, I was just going to say he doesn't make these calls very often.
Okay.
But the other call he made was in the beginning of the year when he's like, the stock market's not going to be the standard by which to judge how successful policy is or not. And I was like, oh, this he's also connected to the White House. So I was like, like in retrospect, that should have been a buy puts like signal. And sure. And this was before, this was like, we were at all-time highs before Liberation Day. And he says this, like, clearly seems like, you know, he knew. So anyway, I'm a simple man. One of the voices that I follow, this isn't a surprise to me because, like, in the back of my mind, I've just been like, the play's going to be to lever long. Am I levered long? No, I don't lever anything. But my portfolio in general is a very long delta. So, like, it hasn't been surprising to me, even though I feel the same thing everybody else does, which is, are we going to hit 6,900 today? Like, is that going to happen? Like, that might happen today. That seems crazy. You look at an SPX chart, it's 10x'd in not that long of a time. I mean, I remember buying SPY 235 puts. Like, I remember buying those and they were not that far out of the money, like at COVID.
You know what the market does? The market's like,
what did you do, Troy?
The market's like this. It's the idea of saying, like, okay, we have FOMC tomorrow, right?
Yes.
We do, and nobody's talking about this.
Okay.
Doesn't matter.
And we supposedly do, even though the supposedly also, newsflash, if you didn't know, the U.S. government is shut down right now.
It's like telling
It's
like telling a teenager. I mean, it really is. It's just like telling a teenager, like, let's say they're homeschooled, as all good teenagers are. Yeah. And you're like, hey, you've got a bunch of work to do because tomorrow, you know, we've got to be out all day. So you're not going to be able to get it done. So you have to get it done today. Do you know what the market's doing right now? Let's just say, for instance, you're like, hey, you got to get your work done today. You know what it's doing right now?
Hi.
I literally said, go read. She reads for 12 minutes.
I read The Hobbit.
She reads for 12 minutes. She comes in. She comes back and she says, I read. I said, you read for 12 minutes. And she said, can I watch TV? I said, you can have 12 minutes of TV. Now, this is the frustrating
part. The 1-to-1 ratio. 1-to-1 ratio.
Phase one, of course, when they're younger, it's like, that's not fair. And so you explain, you know, what it is. The teenage mind, you know what she said? She said, great. Yeah, I'll take the 12 minutes. That's what the stock market is right now. You're like, hey, you might not want to rally all day into FOMC. And the market says, yeah, I'll do that. I'd love to do that.
That's right.
I'd have another one. Anywho. So, all right. So this is what we got today. We talked about yesterday the study. We did a little study. And by study, I mean, I showed a back test. Study sounds so sexy compared to that. But,
you could call it, this is a multi-year study with hundreds of data points.
I like this word study. It's very sophisticated.
We've been doing studies at Option Omega for years now. Yeah. And but we talked about don't fade a gap up. Don't fade a gap up. And great point, good origami man. Listen, that's a Friday discussion.
I would actually like to spend a whole
Rusty.
I would like
Mac.
I
could go.
We should spend a whole show on the Hobbit movies, perhaps.
Yeah. So we did a study. Mr. T, shout out Mr. T. He ran with it. And I want to show you what he did. He did a little thing. One way you could fade it, a gap up, that might work. Okay. So we're going to share that. Can you guys, let me do this here. Can you see that?
Yeah.
Matt, the great reader of the entry criteria in Option Omega, the keeper of the scroll, as they say.
Buy a put.
But there's some specifics, Matt.
Yeah. Okay. So this is my first time seeing this. So this is a 9:40 to 10:40. So it's an hour. It's got 100 times in the last couple years. So not a ton of occurrences. Why does it not have a ton of occurrences? Because it's got, I don't know, it's got 3 filters. So here's the I'm gonna give you my take on the thesis behind these filters.
Yeah.
So above 5-day SMA. So a generally bullish, short-ish term reading. Okay. Gap up, min, and a max. So a move up, but not an insane move up. And then a breakout to the low if it happens kind of early in the day, and the summer, the close of the window to enter the trades is 10:40. And then the X. So here's what's interesting. It's kind of got what I would call like a chillish exit. The price going up because you've bought a put, an expensive put compared to many backtests we see, a $12 put. So if the price moves up, your put is going to get closed. And most of the time, I would wager most of the time, your put is going to get closed. Indeed, the win rate is only 35%. What this strategy is this is kind of swinging at a like, what would you call this? Swinging at a 2 and 2 count. You're kind of swinging for the fences at a 2 and 2 count. And like when you swing for the fences on 2 and 2, you're going to strike out a lot. But if you get a hold of it, you can see there was a $10,000 winner. Can you scroll down and look at the chart? I'm interested to know how many of these you occasionally catch these big winners. And a big winner in this case would be the elevator down. That's what you're trying to catch, Troy, the elevator down.
I like it. I like this approach to it. It's a little more nuanced. It requires a little bit more. It's not running as much. I mean, sorry, sneeze attack. To the point, it probably didn't run yesterday, which is kind of what we want in this instance. You wouldn't have done well with this.
It ran recently though.
Yeah, I mean October 16th. That would have been what, a week and a half ago.
Yeah.
Yeah, and you did great. I mean, this is actually a perfect example of it. So I'm about to sneeze. You can look at that there just while I'm talking. Did I catch it? Did you catch it?
Yes.
It's actually worse if you barely catch it. We're like, I'm about to sneeze.
And this feels like one that would be tough to trade manually. Like just emotionally,
for sure.
It's like, man,
yeah.
The first thing I thought of is, how does this work with other puts? Like, how does this work with a $4 put or an $8 put? Or how does this work? Another way to do this that would be interesting. How does this work on this test, but a 1 DTE or two, or even like a 2 DTE?
Yeah.
Like, okay, I am just, if you try it with a $4 put.
Yeah.
Try that.
Or would you consider, I'm thinking the other way, an idea that isn't as powerful as a long put, because that if we go down, you can just, make a lot. How about an at the money call spread? Because you'll have like a 1-to-1 or halfway
selling the call spread,
selling the at the, so when this trade triggers,
right,
selling it, not an out of the money call, because that's going to have obviously higher probability, but stinkier risk reward. Selling at the money call, buy your long call 10 points away, right? Or something like that. Now you have a decent risk reward with that. Now you're not sucking up on the extrinsic value. You're sucking up the other way, right? You're bringing it in. I don't know if that would be, if that would work better. Or
we'll see. I mean, this is the beauty of doing studies. I mean, it's still a positive trade with the one lot. I mean, this is doing a one lot, right?
Actually, the win percentage goes up a bit.
Yeah, this is actually what I want to do, though. I want to be a bad boy with this. I'm going to go
a bad boy.
I'm going to go put, and I'm going to go fixed premium.
Okay, I like that. Yeah,
we're gonna finance the put with the calls. I love when people say that stuff.
I love that financing term. I love.
Oh yeah. We're gonna finance our long gamma with some.
That was big on that. Do you remember that options show that would be on Fridays? Or is it still on there? Options action.
Oh, I don't think so.
They were great at
correct.
that.
I know. I liked it too. Chat, can you let us know if they still have that option show on CNBC? It was like right after the bell on Fridays, wasn't it?
I used to love when they would buy a call vertical debit spread
Yeah,
we'll
finance it
by selling an out of the money put. Like wait a second.
It's free. Yeah. Shout out Tom Lee. I mean, it's free money. Options involved risks are not suitable for all investors, but just saying it's free money. It'd be foolish not to do it.
That's right. Why wouldn't you?
Yeah. Look at that sucker right there. You know, when you finance, the power of financing gets you basically, I think, the exact same than they are. I think it's Mr. T is what it was. So
let me I'm cooking on one here. I'll share my version here in a second.
Share it, Matt. No, do it now.
So what I did is here, let me drop this in the chat for everybody. Mine's just a little bit different. The first thing I did is
because I can't copy paste it.
The first thing I did is I only made 2 changes. I just changed it to a cheaper put. Which is going to lose more. And then I also added excess slippage because, and I uncapped it just for some variety here, because this one can lose. It probably won't go to 0, but, it is Tom Lee. I'm not Tom Lee, but it's like he's reading my mind this morning, catching the elevator down. Now, I don't know if I have max delta convexity, but my point is, if you're catching the elevator down, what is the goal of this test? Is it to win more or to catch the elevator? Here's a question. That's my posit. And maybe I'm Mr. T. If you're watching, you can enlighten us with your thought process. But my thought when I look at this is, how low can you go to catch these elevators? Which is maybe not what Mr. T was designing. So to the point, good origami man, you could turn this bad boy into a risk reversal as well. And I always here's the thing, Dan, help me with this. I always want to make a risk reversal work. I found it very difficult to do, but the times when it's done, it is maybe in a situation like this, where if you're just buying a $4 put, that you don't have to be as risky with your risk. So you could sell maybe a call spread that's a little bit farther out of the money. Yeah. To Tom's point. Yeah. I think that might be interesting. So,
because then you're not increasing your margin versus what I was saying, like option action.
Right.
Buy a call vertical debit spread and finance it by selling a put. Right. Your margin goes through the roof. Your risk goes up. But this makes sense.
So here's a challenge for the chat. Troy's got a model up.
This is nothing what we've been talking about.
Here's a challenge for the chat. Why don't we ask the chat to come up with a risk reversal version of one of these tests that makes it more robust?
To Dan's risk reversal, what are you defining as a risk reversal?
So instead of buying the put, combining it with some other way to do it that smooths out the returns and maybe doesn't have a crazy impact on margin.
That doesn't. That's the key. That doesn't affect. Can I just say one thing on your put thing here, Matt? I like that. I mean, the thing I also like is you have a relatively tight stop on the upside, right? And the put, because you said if we go,
I didn't even change what he said. Yeah.
Oh, because it said if the SPX goes up 0.23% or something.
Yeah, it was 0.35 and
0.35, which isn't a big move, right?
Right. And the I have yet another version. I tested it with $2, and the $2 doesn't do quite as well. When you do this with $4, you're getting out sometimes for not very much money. So there's there might be, you might want to tweak that. Again, you could play around with a looser or a tighter.
But you're losing very little. So at least psychologically,
well, sometimes you're not. Sometimes you're not. If there's a big price move up with the slippage that I have, there's times when it gets out for 5 cents. Not very many, but it pretty regularly gets out for less than $1.
Okay.
Can I just completely hijack this for a second?
Yeah, let's go in a completely different direction.
I like the modeling. I'm already intrigued.
Take the wheel.
Thing. Yeah.
I just want to completely hijack. So here I have a emotional problem. And this is going to be a little bit of a debate the last 10 minutes here, if it's all right. So I've got a 923. Okay. This is on. This killed it yesterday. This is doing great. even in the midst of, I put it on Friday, even in the midst of the crazy move up, we were still okay yesterday.
Oh, sure.
I have now, because I don't use exact strike offsets, I have the 68.65 call and the 68.70 put, or sorry, 68.70 call. So it's diagonalized a little bit.
What's the put? What's the put?
Sorry, forget the puts first. The puts are dead. The puts are dead. The 68.65 call and a 68.70 long call. So shorts 5 points below the call. So we closed above that, which was fine to me because we didn't. But we've gapped up 18. Now that's real annoying to me because here's my problem. This thing is at open, Matt. This is gonna.
We're up 18 right now.
We just went up 18. That's real annoying to me because this thing is going to close for a loss at the open, which is fine. That's part of it.
Okay, so what is this?
This is basically I have delta leg.
Yeah. It's gonna get delta'd out, is what you're saying.
It's gonna get delta out. But
we're gonna open at 6,900.
Here's my problem.
Did you put this on yesterday, Troy?
No, this is Friday.
All right.
Here's my problem. This is just talking emotional. I want everybody to think through this with old Papa Bear for a second. I have a strong conviction that we're not going to go above 6,900 today. And if we go above 6,900, we will fade 6,900. Now, my strong convictions have lost me so much money in my life. Yeah. I just want to preface that. Thoughts on this? And Matt, I mean, listen, it's tough because this thing, if it drops 10 points on open, I'm golden.
I didn't realize we had gone up.
I know.
Like, I think it was 5 points when I looked earlier.
Yeah, it's these type of days. This is what I'm saying.
And look at VIX. VIX was up most of the morning. What was there? Was there a tweet, chat? Was there a tweet at like 8:54? Did we miss something on the show? Because it looks like at 8, like VIX was up for a bit, and then it just kind of, I mean, like a non-zero move down. I'm not answering your question. Listen, I'm not smarter than these back tests, but if I was going to do something like that, I would do something simple and do what Dan said maybe, and like just sell an at the money, very high risk reward, call credit spread 5 wide, or just buy a put debit spread, maybe.
So you're saying let it exit, do what it's got to do, and just then adjust accordingly.
Well, can I?
Just do a different play to test your conviction and let the back test exit. That's what I would do. I mean, probably.
The only thing just a quick thought here on this trade. I mean, what we have here, I think of Cool Hand Luke. What we have here, right, is you have a calendar on the downside in this particular one, 67.10 strike, but on the upside, it's not a calendar. This is I would call this an outside diagonal, right? Your long is outside your call. So it's not your short. So there's two problems here. So it's not as strong as if your long were 68.65, if it was a double calendar, right? So it's a single calendar on the downside, diagonal, outside diagonal on the upside. So whereas a calendar would have been a stronger thing. But this is the classic problem with a double structure. It's your mother-in-law coming over for Christmas. She's supposed to come over 2 days before. She comes over a month before. Now, you love your mother-in-law, but you say, it's a little early. We're not ready. And this is the problem here. And on 9/23, we're up at if we were here with a day to go, Troy would be like, all right, I'm ready. Let's go. It's close, but part of me, based on what Troy said. Now, again, you'd have to but you're just saying from I always screw the word up. Arbitrary trader, discretionary trader. You need a few long deltas here. If you converted the upside from the diagonal, get it into a calendar, give you a little more room, but you need a little long, if you wanted to stay in this trade. Troy's thesis is, hey, I think we're going in SPX, probably going to go 6,900 today. but there could be a wrestling match. We could go down a little bit. He needs to buy. He's got some time here, right? You got another week here, Troy, on this trade.
Yes, but the problem is I have delta exit. So the delta, I mean, it's not a problem; it's a solution. But I have a
listen.
You turn it off.
Since we're this deep in the weeds, here's the context. We're not off the rails. We're on a different track. It's fine. Quick shout out, Damien, Stephen V, 2 OGs. You guys are awesome. Microsoft and OpenAI had a détente. Is that the right word? They came to an agreement on something to do with, I'm sure, some sort of very complex ownership structure. But Microsoft is up 3.7, and Microsoft's a big boy. So I'm guessing that is probably, we're up 18.
That's the trigger.
Yeah, so that might be the trigger. And let's see what Microsoft is it now, pre-market or
550.
550. You know, when I had Microsoft calls during COVID for 200, maybe I should have held those.
Well,
I remember that strike. That strike. My leaps.
I want to end this by just shouting out. If you're a young man, if you're a man in your 20s, 30s, 40s, maybe you're married, maybe you're learning about life. You know, Dan obviously teaches risk management for a living. So if you want to learn risk management, that's the guy to talk to. But also, there's some life lessons you can learn from Dan. Because I want you to, if we could rewind the tape, I want to just point to something you guys might have missed. But as a man in my 40s now, I'm
getting scared, man. I'm getting scared already.
When he said his mother-in-law, right before that, he did a subconscious thing that is a OG. It is a mastercraft, because what he did is he said, "My mother-in-law." Now that right there, that's a brilliant move right there. The quick glancery. You look both ways before crossing the street.
Make sure it's safe.
That's right. I love that. It didn't go unnoticed.
Good. You gotta you gotta be careful there. But when you say that with double structures like DCs, it's like that's all it comes to. You know, when you're at the short strike, how much time is left, right? And where are we at there? It's like how do you have a trade that we'd love it to go to the short strike at some point? I mean, that's ideally, but it's very tricky. When do you get to that short strike or close to that short strike? And a 923 is a different animal, right? Because you got a week left. Yeah. I mean, part of me said, you know, just one last thing on risk management, you know, you stick with the bat, you know, hey, that's why you have the testing, right? To get you out at the right time. Trust the back test, right, Matt? Trust the back test. Here we go.
That's my goal.
That's
my goal. Listen, here's what I've realized. This show has been a journey truly to Mordor. We've been all over the continent. We've done everything. Right. Here's my nugget. I just realized this, as you said, trust the back test. I think if I can't trust the back test, I'm oversized.
That's a great point.
I don't know. I don't know that I may have thought about this before. Maybe maybe Wizzy said it. Maybe it's been in my mind, but as soon as you said trust the back test, I just thought for a minute, I'm like, yeah, if I'm not oversized, I should be able to trust the back test.
Yeah.
Yeah. To Troy's point, to take this full circle for the week, yesterday when we gapped up, you know what I wanted to do? I had some long delta stuff expiring. I wanted to hedge it. I just wanted to hedge it out fully. And if I had hedged out fully, that would have been equivalent to just closing the trade right then. That's what it would have meant for me. And Troy's back test showed me that smarter not to do that.
Yeah.
And I was properly sized.
I just hit hot management, so we'll see what happens next.
Okay, here we
go.
That's all right. Inside you.
It's over with.
There it goes.
So
inside you, there are two OO show co-hosts.
That's right. Tomorrow
a road diverged in a snowy wood. In which road will you take?
Tomorrow, there's
I
a good
get all
chance
management. I love
I
that.
come on the show tomorrow and I say, like a politician, I made mistakes. I'm going to take some time to reflect. I'm going to go spend time with my family.
Yeah.
We'll see what happens. Anyway, you guys have a great